It is time. I think we're about to see a parabolic run towards the upside in crypto, and if you're left on the sidelines, it's going to really hurt your performance in terms of gains over the next couple of years. Now, I know there's a bunch of coins that have seen some incredible upside recently, with the likes of Kapa, LO1 and Solana seeing incredible moves. And if you're wondering whether or not it's time to get into these particular coins, I'm going to show you how you can FOMO into these in a safe and controlled way. Hit the like button. Let's get into it. Now guys, I told you the other day, before we saw a very aggressive run towards the upside, the Bitcoin was likely going to see a strong performance. And as we look into this, you can see that this trend line has been going for around 6.5 years, and every time we've seen a bounce off this trend line, we've rallied towards the upside in a pretty aggressive, even parabolic way for Bitcoin. What this means then for the altcoins is also going to be explosive. And if you look across here to Blockchain Center, free website guys, and this is pretty simple, this allowed me to make some fairly solid decisions throughout this bear market period, because anytime it's kind of getting into this green and lower blue regions, you're in a pretty solid time to be able to accumulate Bitcoin. Now, I brought your attention the other day to this, which is the US dollar tether dominance. And while everyone else was paying attention to Bitcoin dominance, I was showing you this because something very important happens every time the US dollar tether drops below this red line. This red line represents the 50 exponential moving average. And if you put it against the total market cap of crypto minus Bitcoin, then something very interesting takes place. On the top, you've got the US dollar tether dominance. On the bottom, total market cap minus Bitcoin. Okay, very important because this basically represents the altcoins. Now at the top, you can see we have the 50 EMA exponential moving average, which basically takes the average of the last 50 weeks on here. This is a weekly chart and then gives you a reading at each point. So what we can see is in the past, every time we've seen a significant break below this EMA, which I've shown you with these blue lines here, you will see that we have had a very big bull market run in this total market cap. And you can see, having just broken out of this pattern here, you can see we are starting to drive higher. Now, as we look across to Bitcoin, you can see that Bitcoin as well is not by any means slowing down. And if we continue to see aggressive pushes in Bitcoin while that USDT dominance remains underneath that red line, then we're going to continue to see some aggressive growth in the altcoins. Particularly as well, I want you to think about the amount of money that's been sat in Bitcoin that's been growing. People are taking profits out of Bitcoin and shoving it into altcoins. Now, as we see on the Bitcoin chart, we're running into still a very big area of interest, ranging from around down here at like 29K all the way up here to around $48,000. Now, there's potential that we see some sort of up and down stuff in here, or we can just go up here. But the truth is, no one really 100% knows. And there's something you need to be very aware of right now, because if you look across my free Telegram, link down below in the description, or my Twitter page, again, link down below, make sure you give me a follow. If you want to be in with a chance of winning a cash giveaway to celebrate hitting 50,000 subscribers on this channel, as well as that, you need to leave down below the name of the coin you would like to receive in terms of a cash prize. And I'll be announcing that cash prize giveaway in the early part of next week. Right now, I want you to be kind of aware of something. A lot of the mentality I'm seeing right now is that there can only be an upside in crypto. So if Bitcoin does go for one of those rallies and does just see continuation, which is absolutely possible, because in the past you've seen that happen without any sort of significant pullbacks, I think realistically we're going to get to around 48K before we see any significant pullback. If we get to 48K without any pullback, I would anticipate a fairly substantial pullback after that. But on the way up to 48K, you miss out on a huge amount of gains if you are sat on the sidelines. So what I want to talk about first is this. Kapa, as you can see, has been rallying and building from strength to strength throughout this market. Now, what we can see in the past, we had this sort of build up here and we ran into this significant area of resistance. And if you're subscribed to my channel, you will know that I was telling you that we would likely see a big substantial pullback. Now, obviously guys, we didn't get our big substantial pullback, and I was wrong in that case because I made videos around here and around here saying that we would get maybe a pullback down towards sort of this level, maybe even lower. And as you can see on the first time, that pullback only counted for around 35%. And on that second pullback, we only got around 21% in terms of a dip. Following that, we broke that high, and then you can see it pushed all the way up around 121%. And fine, we win some, we lose some. Instead of having more exposure to Kapa, I was just having exposure to other coins like Solana, which still did pretty well. But in terms of like the attitude and the feedback about what's happened with Kapa, a lot of people are like, well, I knew for sure that this was going to happen, and then it played out. Now, there's a really big problem with this, and it's this. It's called the illusion of control. It's not luck. I did it. Now, let me use another coin just for this example. Let's say this is Matic, that I was buying into Matic at this point down here. I want to ask you a question. Do you think that I know once I've bought that coin whether it's going to go up or down? If you think that I know for sure that it's going to go up, then you're completely wrong. However, the problem is if I did buy there and then it goes up here, now I've kind of taught myself that I did know for sure that I only got in because I was going to go up, and then I made lots of money because I knew I was going to be right. And this now creates a problem, because if this situation plays out, now what do I think of myself? If I'm new to trading and I've suddenly come across and the first trade I've just gone into has gone up like 140%, you better believe I think I'm the world's best trader. But this situation is nothing more than this. If you've ever tossed a coin, which probably you have, then traditionally you'll end up with either a heads or a tails. If you go and toss that coin 5 times in a row and you get heads every single time, what do you reckon I'm going to get the next time I toss that coin? Well, if I was in a competition and I was thinking more and more about this, if I got heads every time for 5 times, maybe the next time I was expecting to have a tails because it's been heads every time so far. Or maybe the next time I was expecting it to be heads because clearly it's a weighted coin and heads keeps coming up. Well, again, we're completely wrong. It's completely down to luck here because there's equal opportunity of hitting heads or tails. Although maybe we've seen it stacked on one side throughout a period of time, the next time I toss that coin, I'm still back to that same level of probability. And when it comes to the trading charts, it's nothing but this. We need to be very cautious of our own mind as we go, whether we've been having really good luck or really bad luck. If I've been losing in all my trades that I've been placing recently, it doesn't necessarily mean that the next one I make can't be a winner. And the same thing, if I've been winning all the time, it doesn't mean that the next thing I do can't be a loser. So what are we going to do about it? Well, as you know, guys, I've been telling you time and time again that we can't be FOMOing in to these coins like Hello or Kapa or whatever after they've seen these really big pumps. But maybe that means that we end up missing out on tons of pumpage and we really can't control our inner degen wealth. How do we get involved and how do we do it in a controlled and safe manner that we're able to live with? Well, first of all, we need to know that if I buy into a coin, for example, in this situation, Hello, and it pulls back on me, let's say 40, 50%, and it can, and this is not a dig at Hello, this is just money and this is just supply and demand. This can happen. If Bitcoin suddenly has a drop, you'll see coins that have seen very good upside recently having good pullbacks, which is what we saw yesterday with Bitcoin taking a little dip. You saw most of those smaller alts that have had really good runs recently pulling back far more aggressively. Well, I only am allowed to FOMO into a coin like this, for example, if I can take it being down 50%. If you can take being down 50%, then by all means go ahead, because you never know, guys. You could see another 100 or 200% push, okay? But I want to point out something. This isn't what I would do, okay? Just telling you because I know people can't help themselves, yeah? When you're seeing these coins pumping and everyone wants to get into them, I know you can't help yourself. So I'm just going to try and tell you something. That kind of coin toss thing, and just because it's been going up doesn't mean it's going to continue going up. In fact, the chances or probability of it coming down after going up a lot are higher. But Bitcoin continues to pump to around 48k, then there's a good chance you'll see bigger continued pumps in Hello, Kapa, Kujira, a bunch of other cryptos. Let's look at this chart. As you can see, a fat candle. And one of the guys in the Telegram group a couple of weeks ago was talking about this coin, saying, you know, guys, take a look at this. It's definitely one you should be paying attention to. So if you want to be associated with people who are calling out coins like that for absolutely free, Telegram link down below. Now, as we look at this on a weekly, it's a pretty intimidating looking candle to be able to try and jump in on. So how can we go and use this more effectively? This is tradingview.com. It's free. Go and check it out. Now, as we look at it onto the daily, you'll start to see some interesting stuff happening, okay? And on the kind of more longer time frames, it does look a bit more bearish because this is a hammer okay, which shows you that there's resistance or selling pressure coming in. Now, if we jump down to a 4 hour, you'll start to see that it actually looks more like we're developing pullbacks or into these kind of zones like this. Now, if we go back to the weekly, you'll see that this doesn't really show us anything at all. But if we go to the 4 hour, you'll see that we had a very nice pullback in there that maybe if we'd bought down here, we could have then jumped in and got another 41%. So really, you can be getting down if you want to around the 4 hour. Once you start to see a pullback on the 4 hour chart, we then might need to go a little bit closer and look at something like a 15-minute chart. Because then what we can do is start to identify buy zones. Now I use this pullback here as a good example. As it kind of double topped up here, there's a good chance that it was going to have a bit of a pullback. And then you can see from that double top up there, it pulls back around 28% at its totality, which is pretty big, considering it's happened within the space of about 45 minutes. So how would I know it was going to stop down around here? Well, I don't know for sure, but there's a fairly easy way to be able to find this out. As we can see, we can put across these things called buy zones. Now, how do I identify a buy zone? Well, we can see that this was a very big push. You can see these candles, these bull candles are very big and they're pushing hard towards the upside, but they originated from a little bit of sideways action and suddenly bang, up they went. So what does this tell us? Well, it tells us that from where this originates, there's a good chance that more buying will happen if the price can return here, okay? Now, what we can see, it does dip and then it gets bought up, okay? It gets bought up very quickly and you might have missed that move. But the next time it comes down into here, you can see it gets kind of more wicks and stuff there. Now it comes down below it and then pushes above it. Now, the harder it comes down below that area, probably the safer I am to buy into it, okay? But remember, it's come up very aggressively recently. There's a good chance it's going to go further down. So am I alright with being down 60% in a coin like this? Potentially. If I'm not, and I still want to gain exposure, well, you have to do something called dollar cost averaging, and it's basically less degenerate. What it means, if I've got, let's say $1,000, I can put in $500 at this point if we get a further continuation down towards this level, let's say, maybe down towards even this dip through here. Then I'll be down on my $500 and I'll be down like $165. I believe that's the right maths, around $165 down at this point. So what can I do if I'm down $165 on my $500? Well, I can go and chuck in another $500 down here, which is the remainder. Then if it gets back to here, I'm now in profit, whereas otherwise I'd just be wiping my face back at zero. If it continues, however, without any pullback towards the upside, then this $500 I've got in the game, and if it gets up here and I make 50%, then yeah, I've got another 250 in the bank, and then I'm sat at 750, and I've still got this 500 left over, which I can either put into another coin or something else. So right now, I recommend highly being a little bit more conservative and a little less greedy, and taking that kind of leftover 20% perhaps, and still keeping it in some USDT. Because if you haven't been going all in throughout the summer and everything else, then right now, after these kind of big pumps towards the upside, it kind of helps to keep a little bit in reserve, because if you do get pullbacks, you're going to be far calmer and happier that you've got money in the bank to be able to put in and to be able to buy as it goes down, rather than just buying as it goes up. And as we know, because the human mind is spotting those patterns all the time, it's much more difficult to be buying it when it's going down rather than buying it when it's going up. But that's what we got to live with. But realistically, guys, we're waiting for more of a pullback, sort of like this one here. Okay, so within Casper, you got a good pullback there. We've got a fairly good pullback here. So the first one was like down here, 34%. This one up here was more like a sort of a 22% down. And as I mentioned, the same thing that stopped me getting in here is the same thing that's going to stop me getting in up there. And really, if you miss out on this kind of pump like that, you didn't really miss out on anything. And it's exactly the same as being like, well, I wish I bought Bitcoin back in 2012. So did I. But did you even know what a Bitcoin was back in 2012? Did you even know that that was an opportunity? I guarantee that back in 2012, if someone had presented you the opportunity to get into Bitcoin and you didn't, then you would have missed out. And yeah, someone's going to come in and tell you you're stupid, whatever. You didn't have the rationale to make that decision in the first place. So you didn't really miss anything. You just weren't aware of the opportunity. And perhaps for this, you weren't necessarily aware of the opportunity. Or it didn't fit in with your parameters of risk versus reward. So to be honest, instead of focusing on these coins that have all been having a great time recently, start getting in doing some research to the coins that are going to have a great time next that might not have been doing very much recently. Because all this is is a game of luck and an understanding of your own psychology and a control of your emotions. Because basically what happens is in like Kapa, for example, someone puts their money in here, it goes up all the way up here, another 100%. Now they're sat on $2,000. They get in another paycheck. They take another $1,000 of their money up here where they're now sat, where they've got $3,000 in the game. It pulls back on them 30%. And now they might as well not have worked their 9-to-5 job for the last month because they've just wiped away $1,000. And how do I know this? Well, all year I've been talking about buying Solana, and as you can see, Solana's also had a really good run towards the upside. How does this make me feel? It makes me feel like I'm a damn good trader and I know exactly what I'm talking about. But also, if you've been buying Solana because it's what I've been talking about, and now you think that I know everything about trading and everything else, and because I've made one good decision, that I'm like the oracle for crypto knowledge, or someone else who told you to buy like Casper and it went up and they're the oracle, or someone else told you to buy this coin and it went up and they're the oracle, be damn careful. This is the exact same thing as you coming up with the decision yourself to buy it. I know that my next call could be really crappy and it could go down like 50%, or it could be really good and go up like 400%. But all I'll do is manage probabilities. Past performances don't equal future results. So if you really must FOMO into coins that have been rallying really hard recently, then the only way you can do it safely is to DCA in, unless you've got mad cash flow and you can just keep chucking money into all these different coins. And let's say over the next 6 months to the next 2 years, you're going to be up, but as long as you can cash out carefully at the end. And if you're wondering where to pick up these different crypto coins from, and you're based in the US or other countries with lots of restrictions that are forcing you to use Coinbase, which costs an absolute fortune, then use MEXC because it's got 0% spot fees, 0% maker fees. That means you can trade for pretty much free on MEXC. And you're like, well, I'm based in the US, it's really difficult, I can't access it. Well, I've got you sorted. With the NordVPN, link down below, you'll get 4 months for free, and this allows you to change your location to another location anywhere around the world. It'll give you this map, and you can select whether you want to be in Austria, Albania, Costa Rica, you name it. And then guess what? You can use all these exchanges all you want. You can benefit from 0 fees, and all for the price of less than a cup of coffee each month. You'll also get 30-day money back guarantee, so if it doesn't work for you, you can just cancel it. But I highly recommend, if you're trading cryptocurrency, this also gives you an extra layer of protection because it's double encrypted. It means that no one else out there can spy on what you're doing when you're making your trades, when you're using different crypto exchanges, all that good stuff, because otherwise they can record your seed phrases, they can watch what you're doing, and then they can go in and take your money. So if you've got more than like $100 in cryptocurrency, then I highly recommend that you are using a VPN to protect yourself, because there's a lot of people out there who are very smart who are trying to get hold of your hard-earned money. So make sure you get yourself a NordVPN as well, because you can go and watch movies and different stuff on Netflix around the world, which is also cool. Hope you enjoyed that video, guys. Hit the like button, subscribe, see you in the next one. Bye-bye.